Hello and welcome to NDTV Profit, and you're watching Bankable. Now, of course, this is our special show focused on India's banking ecosystem and the bankers who actually run it. We have had conversations with some large public sector banks, some large private sector banks, as well as NBFCs in the last few months. And now we're back at it with Bankable. And here today, I have with me Mr. Pralay Mondal, the MD and CEO of CSB Bank. Mr. Mondal, very welcome to Bankable. Great pleasure to talk to you, Mr. Mondal. After a while, I think we've spoken to each other.
Thank you, Vishwanath, and thank you for having me. And look forward to talking to your viewers. Thank you.
Right, sir. I'll quickly start with my first question. Now, this is an environment that we're in where banks are the darlings of the markets. People are all talking about the fact that you have a high growth scenario in India. Inflation is more or less stable, even though slightly higher than what the RBI would like. But having said that, expectations from the sector are increasingly high. Do you think then that in the current environment, this is a sort of a prove yourself or just become irrelevant type of a situation for banks?
Yeah, I think, Vishwanath, we are at a sweet spot at this point of time, both from a overall country economy as well as banking perspective, because over the last decade or so, I think overall a lot of steps has been taken by which most of the banks are looking a lot more healthy across segments. And it has been well supported by a lot of economic development programs which has been run and which is starting to show results. As we are all aware that we will be one of the highest GDP growth countries in the world, and we are aiming to go up in terms of our ranking in the GDP ranking as well. And that in India cannot happen without a fair bit of participation of the banks in the ecosystem across the board. And that is going to happen, and hence it's a good time. Of course, one needs to be careful of things like geopolitical crises, any kind of a shocks that can happen in the world. But purely when you look internally and look at India, I think we are on a good platform. As you rightly said, in terms of inflation, we are seeing a glide path towards 4%. It may take a little bit of time, but I think we are on that track. And RBI is clearly focused on inflation management. Thankfully, growth has also happened parallelly. I think depending on which economist or which agency you're talking to, it is anywhere between 6.8 to 7.4. So I think that's a very good number to have. And if you give a multiplier of even 2 to that, 15-16% growth on the credit side is given, and with GDP expected to grow faster over the years, because if you have to go to that kind of ambition which you have as a country, the banking system has to be performing, has to be supporting, and I think we're on the right track on that front.
Right, Mr. Mondal. So, quick question around where CSB is in its current stage of its life cycle. You've seen a period of consolidation, then a period of growth, and now we are back at a position where it's sort of at a takeoff stage for CSB once again. Under your leadership, what do you aim for CSB for the next, let's say, 5 years? Because that's the new government has come in, so 5 years is probably the right time frame to look at.
So, Vishwanath, I think you're right that the bank is rebooting itself completely. And when you look at, we have created a vision for the bank, which you call it SBS 2030, which is by 2030 where the bank will be. And today we have a slightly higher gold loan portfolio at this point of time, but by 2030 our vision is 20% gold, 30% retail, 20% SME, and 30% wholesale. And we are putting the right trajectory on that. So we are building the bank on 5 fundamental platforms, because I spend 70% of my time in building the bank and 30% of my time in running the bank, because that's exactly where the future of the bank is. So we build it on 5 platforms. One is governance, one is human capital, the kind of a leadership and culture. The third pillar which we are building it is on technology. fourth one is customer service, and fifth one is compliance. So I say that these are the 5 things I constantly have, and our entire management team and leadership team is focused on. And under this, we are creating various processes, systems, etc. to build the bank. Most important at this point of time is, I say that whatever we have in the bank in terms of technology 2 years back or 3 years back won't be relevant 2 years down the line, because we are changing everything, whether it is a core system, whether it is a wraparound system, whether it is the digital stack on top of that, the entire ecosystem around it. So the entire technology will define how the bank is progressing. And we are also parallelly building the right leadership. We have built up a very significant quality leadership who has all worked in larger banks, have seen much larger balance sheets, and they know how to scale the bank. So we are in the build phase. Come FY 26-27, you will start seeing the bank scaling a lot more, and the scale will happen across wholesale, retail, and SME. And of course, we are building the other ecosystem as well, whether it is risk management, whether it is the credit side, whether it is operations, whether it is treasury. Almost everywhere we have got people and putting structures in place which will help us building this bank to a much larger size scale. Our ambition is to be in the mid sector, and hopefully just not entry-level mid-sector, hopefully slightly better than that by FY 2030. That's what you're working on.
Mr. Mondal, the question also is with regard to your recent strategic sort of moves at CSB, where you've decided to go down on that corporate wholesale book a little bit. NBFC lending, that also is an area where you're not really pushing far ahead. I wanted to get a sense from you as to what your strategy is looking like. Why is wholesale not part of the game, at least in the near term? You said 30% of the book you want it to be wholesale. How do you reach there?
No, I think it's a tactical decision last year, because we felt that wholesale business is something where you need the right leadership. It's a relationship business. Yeah. Also, at the size and scale where we operate, we need to know exactly which segment and what we need to do. And we also needed to build a good coverage team, because and you need to build the right risk measures and the risk monitoring processes, etc. So to that extent, it was a tactical decision that last year we didn't grow in wholesale that much. Even this year, we may or may not grow that much in wholesale, because we are going to reframe our entire wholesale structure and strategy, because we have now got building the team on the wholesale side. So Manish Modi has joined us as the head of wholesale, who has been a career wholesale banker. And he has worked in ABN, he has worked in IndusInd, and he was the head of corporate banking in IndusInd. So he is building a very strong team, not only directly under him, but as a coverage team across the country. We are also building a very strong credit and a transaction banking team, because any business we do, we have to ensure that the ecosystem is right. And banking is all about, we just can't do one business. You can't just do retail. If you have to have a vision of building a mid sector and then moving into the next sector at some point of time in our life cycle, we have to ensure that wholesale, SME, retail, this works like a chain. And hence we cannot be saying that we are not focused on wholesale. But yes, we have to be prudent and practical and say at what time which we want to do it. So our wholesale journey is starting now, if you ask me, from building part. But this year, we will look at all the portfolio which we have, whatever we need to exit, whatever we need to clean up, whatever we need to do. And next year onwards, we will see a significant growth. So FY 25 onwards, and that's the mandate I have given to Manish, that FY 25 onwards, or FY 26 onwards, which is from April 25 onwards, we should start seeing the real growth in wholesale. And given the size of our balance sheet, the growth will only matter in the end of this decade, right? So that's the time our balance sheet will start also becomes much larger. So that's the time when the wholesale banking will start contributing. I have absolutely no doubt that we will be 30%, at least 30% of our book will be wholesale by 2030.
It's refreshing to see a banker who's saying that I'm willing to wait till I have the right team in place, because that's not how this ecosystem is structured at this point in time. But I wanted to get a sense from you about the way the retail banking ecosystem is currently, right? You're a through and through retail guy. You've time and again proven yourself as somebody who understands the sector and somebody who knows how to navigate the sector. Now, all said and done, we are still in a growth phase on retail. Yes, RBI is throwing some indicators of early risk. They've raised the credit risk weights on certain specific retail products. But to your mind, as a lender who's currently looking at the ecosystem, not just your bank, how do you see this risk in the retail space panning out?
Now, Vishal, you just said one statement in the beginning of this question that, good to see somebody is willing to do a waiting out game. If you see my career and the businesses I have built in past, I've always done that. So this is nothing new. Yeah. Before the GFC crisis happened in 2008, I did a waiting game in retail in one of the largest banks. And it played out, and it really played out very well for us at that point of time. So it's not always we of course have to deliver every quarter and every year, but when we are building a bank for the long run, it's very important to get the long term and take strategic as well as tactical views what we need to do. Coming to the second part of your question, in the ecosystem, I think one needs to take a pause and see what's happening. So when we look at the entire segment, let's divide retail into 3-4 parts. One is the unsecured lending, and within unsecured lending, credit cards is different to personal loan, which is different to business loans. There is another unsecured lending which also happens in MSME and those kind of places where it is basically slightly different to business loans, but you can sort of term it as business loans. Then comes the consumer kind of a businesses, which is vehicles, auto, those kind of products, two-wheelers, and all those. The third one which comes which is in between SME and retail, which are businesses like commercial vehicles, commercial equipments, lab, retail lab, and those kind of things. And the fourth part, which is the agricultural loans, the microfinance, and a lot of this farm equipment and all of this. A fifth part which has come in the last few years, which is on the unsecured side, something called BNPL, which are really the entry level, which you will remember way back. In a way, it has come in a new after it used to be called STPL. Correct. In a way, it's the same thing. So if you broadly divide into these 4-5 parts, I think broadly where you are lending money for something which you know what the end use is, whether it is on the lab side, whether it is on the consumer side, whether it is on the agri side, whether it's on the microfinance side, you're supposed to know where you're lending and what is happening, and that kind of a discipline you have there. I think there is a reasonable opportunity, and that place is reasonably good. Depends on banks to banks, what discipline, what kind of things they use, etc., and what kind of credit monitoring. It's not about always underwriting, and retail is all about, and actually across the banking, it's always about credit monitoring and taking the right action at the right time on the portfolio as well. Coming back to where I think there is some stress building up is on the unsecured side, and I always said that anybody who has a central depository of database and who is watching it closely, whether it is the bureaus or of course regulators, they will have a lot more information than any bank would have at any point of time. Correct. And hence, if there is some guidance coming from a regulator, that has to be taken very seriously. So we have taken it very seriously, and we have been very, very conscious. We are very small, so it is not material to the overall ecosystem at this point of time. But overall ecosystem, I think unsecured credit, one needs to be careful. In my view, what's happening is the smaller tickets, BNPL or anything below 50,000 is starting to show some stress. Also, what I'm hearing lately is not our portfolio, because we don't have that portfolio only, but in the ecosystem, even it started with credit cards, the larger leverage, even the larger limits, and now it is moving into the larger PL also. So, and somebody asked me this question a few days back, do you think the cycle is over? I said that when a business is growing at 17 and 23% respectively, depending on you're talking about personal loan or credit cards, how can you say the cycle is over? Cycle just begins when your growth is still that high. Cycle actually comes to the mid part of plateaus when the growth becomes below 10%. I mean, this is I've seen two, three cycles like this. So this could be different, but I'm talking from my experience. So I think one needs to be a little conscious. One added input is what has happened in this cycle. Every cycle has its own flavors. So in this cycle, this entire digital play which has played out, okay, one needs to be very careful because it's very easy to digitally give money. It is very difficult to digitally collect money, okay. And when and digital is happening globally all through, so you just can't give a loan based on a credit score or getting some data from the ecosystem, because this data can be gamed also by customers at times. We have seen in my previous afters, I've seen how data gets gamed. So given that perspective, a touch and feel, understanding the customer, that KYC is just not a process. It's also understanding the customer. Know your customer is very important, just not from a liability perspective. Liability, of course, has higher risks if you don't have known your customers very well. But in retail assets also, knowing the customer is very important. So I'm a little bit of old school traditional on this. Digital is a methodology to make the process faster. Cannot be just a methodology of taking shortcuts on underwriting is my view. So I think that's where we are. So we have to be a little cautious at this point of time.
That's interesting because you've got this entire fintech ecosystem built specifically on digital delivery and ensuring that turnaround time is shorter and therefore customer gets access to credit as soon as possible. One question, and then after that I'll come to the last question that we have for this interview. But one quick...
But Vishwanath, let me clarify this.
Yes, sir.
Vishwanath, let me clarify one point here. I'm not against having digital ecosystem because that's customer convenience, turnaround time, all of that is very important. But finally, you need to know your customer. And that's where I'm saying that you have to have digital. But in addition to digital, you need to have your checks and balances. That's the point I'm making.
Right. One quick answer, and then I'll come to the last question. I wanted to ask you, do you think that there's anywhere near India's anywhere near a unsecured bubble territory, or do you think that those fears are too maybe too hyperbolic?
No. I don't think there is a systemic risk on the unsecured side. So what has happened is when you go back to 2008, 2009, and which impacted the ecosystem, which ran for 4-5 years after that time we didn't have a proper established credit bureau. You didn't have enough data about customers. You couldn't even, have a triangulation of customers, and all of that things were not there at that point of time. So to that extent, if intent is right to correct the portfolio, banks will have the ability to do it faster. But if banks, I'm not saying banks, NBFCs, financial ecosystem, if they try to manage the system, okay, by increase the denominator or doing something here, managing something there, the first thing I understand in retail is whatever you see not right, just upfront it, take provisions, move on and build a good portfolio, okay. So this time it will be very different depending on institution to institution. Also there are valuation stories which are building in the ecosystem based on retail lending, etc. So objective is to build an institution or create a valuation, we don't know. So all of that will be different. But when you look at the ecosystem, the good news is a larger part of the business, okay, is with larger banks, and I don't see too much of a risk with the larger banks. Banks like SBI, HDFC, ICICI, they are very large banks, right? So systemic issue will not be there by 2008, but what worries me is something different. I'm saying that don't go by values, don't go by NCL or credit cost, go by how many customers will get impacted, if at all there is a small cycle also. And that dents the confidence of the new people who are coming into the ecosystem. Do they understand credit in the first place? What is it that we are doing to educating credit to those customers? Just business is not enough. So I think that's the ecosystem, that's the process which I'm saying that I'm more focused on in terms of studying the system. So there is no systemic risk as such, but I think time to take a pause and look at it. And also we have a responsibility to build good credit across the ecosystem for the long run of the country and good for the people. So I think that's where we need to focus on.
The last question I wanted to ask, and my viewers will probably not hate me for not bringing up this earlier, but the question here is about liabilities. Now, for a lender of your size and the current dynamics where liability growth is just not catching up to your credit growth, is it highly difficult to continue building that strong liability base which can support your credit. I know for CSB specifically, it's not that much of an issue, but overall in the system.
Yeah. So liability can be defined in two parts. One is funding and one is customer franchise.
Yeah.
Okay. So from a funding perspective, there are many avenues because finally all money will come to the bank in some form or the other. You know, a lot of people say that money is going to the capital market, etc. But in some form or the other, it comes back, right? So in terms of funding back to the banks. So from that perspective, the structure of liability is changing. For example, CASA. I understand there is around 400 basis points decrease in CASA, which has happened in the ecosystem.
Correct.
You can give 50% of that. Two reasons, because interest rates are high, but balance 50% is structurally something is changing. It is a CMS moment. What happened when the entire efficiency started creating, and current account customers will need to keep so much money in the current accounts on a daily basis. Similarly, UPI has changed a lot of things in the ecosystem, and hence the efficiency which has got created, which is great news for the banks. I mean, CASA has nothing to do with the country, it is to do with the banks. So from a country perspective, that efficiency is very good. So I really like what is happening in the ecosystem, that people are getting more efficient, having access to funds much faster and all of that stuff. But structurally, I think the CASA, taking CASA higher for the ecosystem will be difficult. There will be something will go up when the interest rate cycle changes, but eventually it may never touch those kind of rates levels which it was at that point of time. Coming to funding structure, I think there are 4 or 5 funding structures. One is the fixed deposits, one is CASA, one is borrowings, one is refinance, and one is CDs. So I think as a small bank for us, funding is not a problem at this point of time. So that is not an issue. Last year also grew by 21%, which is faster than the system. System was around 13%. But I think because of the merger and all that happened last year, the big merger, there is a little bit of, and also there's a liquidity challenge in the ecosystem, which still is negative. And till the inflation is under control, I think hopefully once the government announces the budget and after that spend is happening, right now the advance taxes happen, that's why it's a little more negative. But I think overall liquidity issues may start getting better somewhere by the end of this year, hopefully, especially after the budget announcements and after the government spend starts picking up. But structurally, you cannot build a good bank without a good liability, because the strength of a bank is liability franchise. Quickly, I'll tell what I mean, differentiate between a franchise and a liability. Franchise is customers, and easiest is to get customers to the liability route. And once you get him to the liability route, you then can cross-sell and build balances, because product level profitability is coming down, but customer level profitability to go up if you are able to cross-sell. And this is what I did in one of my previous banks. So given that perspective, building a customer franchise is more important, because liability still you can replace for a short while with various funding structures. But liability franchise you have to build up. And that's what you're working on. The entire ecosystem which you're building, the systemic ecosystem, other things which you're doing is basically to build a long-term sustainable liability franchise, which is customers, and how to ensure that we get those customers loyal to the bank, having a larger share of wallet and getting multiple. And that's the money, follow the money principle, the money will rotate and you will have a larger understanding of how to build the bank. So that's what you're working on. We are not there yet, frankly, because till we have the technology in place, we will not be there. But see the bank, just watch this bank 26, 27 onwards. I think will surprise many.
All right, Mr. Mondal, thank you so much for joining us on Bankable, taking out so much time from your fairly busy schedule, telling us so much more that we needed to know. Thank you so much for joining us.
Thank you, Vishwanath. Thank you, Vishwanath. It's wonderful speaking to you.
All right, so that was Pralay Mondal, the MD and CEO of CSB Bank, and this is Bankable. Do tune in again on the show. We will keep you updated on when is it that we're coming up with the next big guest for Bankable. But this is Vishwanath Nair signing off.